show with the first management on the show today. We have Aarti Drugs. They have in fact approved a buyback recently worth around 60 odd crores, and also they are in focus on account of an antique note which says that API prices have fallen sharply over the past 12 months, and there could be some amount of consolidation in the industry. To discuss this and more, we have Adhish Patil, who's the CFO of Aarti Drugs, joining in. Mr. Patel, thank you very much for taking the time out. Well, you know, this antique note was quite comprehensive in terms of indicating that there is a continued reduction in the prices of key APIs. Give us a sense in terms of what you are seeing on the ground, because the quarter gone by was quite weak for you all in terms of revenue. So how much of lower API prices played into the quarter for you all?
Yeah, correct. Based on our feeling, the actual fall stopped in the March quarter. In the June quarter, as far as the domestic prices were concerned, there was hardly any 2% drop vis-a-vis March quarter, June versus March quarter. However, it was the exports where the fall was sharper in terms of selling prices. But that was mainly on the account of the fact that most of the companies like us, API companies, have an order book of around 2.5 to 3 months. So in March quarter, we were realizing December quarter's prices. So it was in June quarter that we realized March quarter's prices. And that is why there was a downfall in prices in the export market.
Okay, so what is the current trajectory in terms of prices right now for APIs, and has it settled, and what does this mean for business for you?
Yeah. So the antidiarrheal segment, antifungal segment, and antibiotic segment as well, the prices are stable since April. Means it is not moving. Yeah, definitely there might be some input price variation for a certain product, and based on that, the selling prices of that particular product might change. But on a portfolio level, we are not seeing any price variations in domestic market for the API since April.
Hi Adhish, good day and good to see you in. This is Nigel on this side. This buyback news, the street liked it, but don't you think it's a very small one? You could have done a little larger one.
Yeah, actually, we used to do steady shareholder payout every year, and our company policy is that around 25% plus minus 2% shareholder payout we always do. So we thought that right now there was an opportunity to do it before 30th September. So we thought that we will upfront it. So basically what we are seeing is that for the last 8 years, whatever the profits are there, it will be around 26% of the total PAT. So very much in the company's policy book, according to the company's policy book.
So in lieu of the dividend and ahead of that regulation coming into play, you thought it's a good time. Got the rationale with regard to the buyback. I was just wondering whether you could have done a larger one, but I'll take that reply. Let's focus on business then. You know, you started off the year on the back foot with the degrowth in the first quarter. But for the year, you were looking, I think, at a 10% growth in revenues. Do you stick to that for FY25? And also, if you could give us, what is the margin trajectory from here?
Yeah, that's a very interesting question, actually, because definitely when we started the year, we thought that around 14-15% volume growth and around 7-8% negative price variation. And according to that, based single high-digit revenue growth we will achieve for FY25. But based on the first 5 months, definitely there was quite a slowdown in terms of purchase by the formulation. The government tenders across the globe was very low. In fact, we got some sense from our export managers that right now the inquiries are picking up for the export market. So from here onwards, the volume growth would be good. But then because we had bad first 5 months, the overall FY25, we would like to revise down the revenue growth as far as value is concerned in low single digits.
Okay, so when you say low single digits, it's up from, say, 1 to 5%.
Yeah, correct.
Okay, what would that mean for margins? Because you did around 11 to 11.7% in the previous quarter. Based on what you are anticipating when it comes to, say, growth as well as inquiries picking up, what are you anticipating on margins?
Yeah, so the margins definitely, one more impact on margins was because of the new greenfield project which just went online for the dermatology project. Obviously, we are having a little bit of teething trouble in terms of scale-up batches. Nothing to do with the process. It is just the physical properties of the material which is causing a bit of problems, but it will get sorted in a month or two. So once we scale up that, and also the demand from export will come back. We are expecting it to come back. Already we are seeing it. So we are hoping that the outgoing quarters, like December quarter and March quarter, we should be able to cross 13% EBITDA margin.
13% EBITDA margin. All right, let's focus on a smaller part of your business, the specialty chemical segment. Oh, there you're going to run rate, I think, of around 25 crores per quarter. But I believe that you're expecting a sharp jump over year in revenues. So for FY25, FY26 on an annual basis, what should we be looking at from this segment?
Yeah, so FY25 would be a very short time to look at because our second greenfield project will be just going online in next coming quarter. It's almost there. But for the next FY26, we hope that, almost anywhere between 50 to 100% increase in the sales of specialty chemicals.
This year, you're going at a run rate of around 100 crores approximately per annum, if I take 25 and annualize it.
Correct.
So you should end in the vicinity of around 100, 110 crores. So for the following year, since you're saying a 50% jump, we should look in the vicinity of around 160 to 200 crores. Doable?
Correct, yeah.
Okay, so you're not anticipating that 50% growth to come in based on what you indicated in your conference call, which would be predicated on a recovery in second half.
Yeah, so probably the jump might be there, but we are just being a little conservative on the estimates, looking at the current market scenario.
Okay, all right. You also have this 4,000 crore revenue guidance by FY27, and you all have said that you all are on track to achieve it as long as you're assuming current prices.
Right.
Are you on track to achieve it?
It will be slightly difficult. FY27 would be like, means after this year, two years more. But definitely we will cross, we will end up somewhere between 4 and 4,500 crores by FY27.
So you are sticking to that guidance then?
Yeah, between 4 to 4,500 crores, yeah.
Okay, all right. And your debt as of the last fiscal year was around 560 crores, but you've got some capex plans that you're putting on. So how does this number shape up? Will you reduce debt from here, or because of the capex, do you see it increasing?
So the new project capex we are doing with term loans as well. But overall, there are strong internal accruals also. So last quarter, the debt to equity ratio was in fact quite low, around 0.4 by the end of June quarter. And we don't expect that the peak debt to equity will go beyond 0.7 or 0.75, considering the buyback, capex and everything. But that will all just be for a short while, and again it will start going down.
Okay, your export APIs, that was what was sluggish in the previous quarter. Where does that stand in terms of a demand pickup now, and how does the domestic demand look like compared to that?
Yeah, so domestic demand has been good, except for one antibiotic product which is not having a demand, and that is quite a significant product for us. But other than that, rest of the portfolio is doing quite well. In fact, the good news was that a lot of export countries, they have started opening up the government tenders, and in turn, there will be a lot of API demand for the exports. So it will look quite good in the second half of this financial year.
Okay. All right, Adhish. Thanks a lot for joining in and filling us in with all of those details. So the market is still a little bit sluggish. That's why you revised your near-term guidance downwards. But you're saying for 2027 that 4,500 crores of revenue guidance is well and truly on. For the time being, the stock has moved a little bit lower, but the management sounding optimistic about the next few years. Near term, there are some headwinds. Well, let's slip into a short break. On the other side, we'll put the spotlight on Gujarat Gas Restructuring Scheme, which proposed a merger of GSPC, Gujarat State Petronet, and GSPC Energy into Gujarat Gas. Stay with us.